Welcome back to the Wolf of Property and Casualty. I'm your host, Derek Lasniak, with over 15 years of commercial broking experience focused on the middle market, upper middle market, national account space. The Wolf of Property and Casualty is a practitioner led P&C education designed for buyers, brokers, and carriers. Straight talk, no bullshit, each and every episode. Today's episode is called Maquiladoras. And Maquiladoras, if you listen to this show, you know that I'm all about using big fancy words that make you sound smart and in the know and relatable to customers. For those out there who listen and are part of like the construction and real estate world, this might not be the episode for you. But for those who are working in general industry or those of you manufacturers, this is an episode that is absolutely critical because given the climate that's going on with manufacturing, some of the onshoring that's taking place from China. Maquiladoras have always been popular and they will continue to be popular given the state of the economy and the need to produce goods at an affordable rate. What is a maquiladora? A maquiladora is a fancy term, but it is what we all know takes place. It is the use of renting labor. It's the hedge. It's saying, look, I make widgets here in Wisconsin. I can make those widgets in Mexico and ship them back to Wisconsin. And because the labor is so cheap in Mexico, there is a delta to be had there, even with the additional shipping costs. This has been going on for years. If you look up in on a map or if you Google Monterrey, Mexico, right over the border. It's an area that is filled with the Fortune 500 has plants there. And to be very clear, what I'm talking about, specifically more exposed to the middle market, upper middle market space, I'm not talking about very large corporations that have their own bricks and mortar. I'm not talking about Ford Motor Company that's got a plant down in Monterey. I'm not talking about those types of companies where they have global manufacturing centers of excellence. What I'm talking about, which is far more accessible to the middle market space, is a complete rental, a rental of a business to produce parts on your behalf. Contract manufacturing, if you will. But when you do it over the border to take that hedge that comes with labor costs being 10th of what they are here in the United States, you're calling it a maquiladora. So I had a lot of customers, mainly in the manufacturing space, where they're making hard, durable goods, metal machine shops, a lot of companies that have any exposure to heavy industrial, whether they're tier one, tier two suppliers to places like John Deere or Caterpillar, or really anybody who's in the auto supply business, typically are going to be utilizing this types of service. And so a maquiladora starts with you have your U.S. holding company, and then you're going to form a Mexican holding company. Joe's Manufacturing has Mexico Joe's Manufacturing LLC. It's a Mexican holding company set up for the maquiladora operations. Typically, what I saw, no matter where it was in Mexico, is every customer that I've worked with, there are outfits down in Mexico that are catered to this business. And the nice thing about a maquiladora when you're setting it up as a organization is it's kind of turnkey. The maquiladora is going to present you with here is some dedicated warehouse space. How much do you need? We'll supply all the labor. We'll supervise the labor. Typically, the US company is going to have to supply any special machinery, not all the time. If the machinery is that's used to make the widget is pretty commonplace, they won't have to necessarily put any machinery down there. But if you have any kind of specialty brake presses or specialty lasers, or even if you just prefer that certain types of equipment is used to produce parts, you're typically going to have to provide that type of equipment. Typically, the US company is going to be on the hook to provide raw materials. So they're not going to source steel for you necessarily. They might be able to help with that, but it's typically going to be a company, the maquiladora operator is going to enter into a contract with you. And that contract is one you have to look at very closely. Typically, you're going to have to get it translated into English, and you're really going to want to have maybe an attorney that specializes in this. But they're going to provide the space. So you're getting a lease built into that for the space to operate, and you're going to get the labor. The labor obviously being the biggest part because you're going to pay workers down there to run repetitive parts manufacturing, on a CNC machine, and you're going to pay them $2 an hour instead of $27 an hour. So you are outsourcing labor and space to produce the parts. And then the US company is typically going to have to ship the equipment down there. These aren't short-term solutions. Ship their equipment that they need down there. They're going to retain ownership of the equipment, raw materials, and then they're going to have to deal with the finished product and the output that comes on. So what I would see with my customers, I probably had 5 or 6 of these, and I'll talk about the insurance implications. But first, I want to talk about just how they were set up. So I would have a U.S. company. They would have a Mexican holding company set up. Within that Mexican holding company, the assets would be mainly made up of equipment and then raw materials. They would keep a separate P&L for that Mexican holding company and financials down there so that they could handle any of the taxes that were required for the Mexican government. They would also have inventory that they would own, whether it's finished goods and then the raw materials. So those are the things that would be on your US customer side, the buyer side, that they would still own. But in exchange for that, they would not have to worry about any of the things that comes with employee ownership here in the United States. The employees would be handled directly by the Maquiladora. They wouldn't have to worry about payroll. They wouldn't have to worry about benefits. They wouldn't have to worry about short-term disability or any of the Mexican equivalents. I mean, the benefit of the Maquiladora is that if you're a $100 million manufacturer that thinks they can make a part a lot cheaper, a specific part or a multitude of parts a lot cheaper and get them back over the border or get them back to wherever they need, this makes a ton of sense, especially if you're in the, I make 50,000s of these widgets. I had a customer, for example, that was in the metal stamping business and they were stamping repetitive parts. The widgets came out. If they got a stamp down there and they're talking about an operator that they're paying 20% compared to up here, if they know that contract's going to be in place and that part's not going anywhere for 5 years, potentially as part of the contract they signed in a really stable industry, this can make a lot of sense. This can add to your margins, and this can also be an advantage when you're bidding out contracts. So let's talk a little bit about the insurance. That's what this podcast is about. We talk about insurance. Maquiladora insurance is something that I've seen fucked up a lot. And early on in my career, I don't think I had a pretty good grip on it, and I didn't know what I was doing. So I'm going to talk about the wrong misconception that I think if you've done this a while, you're not going to run into this. But the wrong misconception out there is that you take your US insurance program with Travelers or Chubb or whoever, and you can use what you have in place for your US manufacturer to just cover a Mexico entity. Those insurance carriers aren't necessarily going to let you do that, and nor is that necessarily legal. 20 years ago, you used to be able to take US insurance and apply it to physical assets in Mexico, meaning you could just add your Mexican entity as an additional named insured on your property policy, and then you could schedule all your equipment with just a location that's underneath the one you have in Wisconsin. Well, but the Mexican government learned their lesson. For years and years, people were using US insurance to cover Mexican assets and Canadian assets. Well, they woke up and they said, hey, what about the taxes and fees that go into insurance policies? What about those? We as a government, we as our own insurance ecosystem down in Mexico, we're not getting to collect all of that revenue because everyone's using US insurance to cover Mexico assets. So there was a crackdown of that like in the 90s. And now Canada and Mexico very specifically say you have to use locally admitted insurance. A failure to use locally admitted insurance, meaning you have to have an insurance company and an insurance broker that is licensed and domiciled to do business in Mexico. A failure to do that, if you get caught, let's say you get a carrier to say, I'll use your US property policy to cover a property down in Mexico, they can hit you with what they call excise taxes on those claims, meaning a 40% tax on your claim payment or a 40% tax on your premiums. So it's really not worth it. And there's a lot of ways to set it up. But the first rule of insurance, when you have assets on the ground within Mexico, setting up a maquiladora where you have an insurable interest, typically that's going to be in the form of either finished inventory, raw materials you're shipping down to your maquiladora, or the equipment that you have down there that you remain ownership of, even though it's a rented workforce doing the work. So you are going to need locally admitted insurance, locally admitted property insurance, locally admitted general liability insurance, since you are a tenant of the maquiladora in that lease. You might have a vehicle down there because you're going to have a US employee that's down there frequently supervising the operation and maybe even permanent. You're going to need an auto policy that's local. All of these locally admitted policies have to be with a broker and an insurance carrier license to do business. The big insurance companies out there, they're going to be able to help you with this through their international program. They can oftentimes place a policy for you utilizing somebody in their network as a broker. For you more sophisticated brokers out there, maybe this is tied to a really big client, I would encourage you to develop a relationship. My old firm, we spent a lot of time trying to get this right because we were battling the Aons, the Marshes of the world that had Aon Mexico. They probably had an Aon office in Monterrey. So one of the things that I used to sell to my clients is, hey, I've got my relationship with Jose Insurance Agency in Monterey. They are going to be your broker. They are going to meet with the person that you have assigned to oversee your maquiladora. They are going to be the broker of record who places the locally admitted policies to be in accordance with that requirement in Mexico. And I'm going to let them keep all the commission. We're still going to pull all the strings here in the US with my CFO. We make the calls, we design the coverage, we pick the carrier, we set the price. However, I'm going to cede all that commission to that local broker because guess what? If a fucking fire breaks out, I'm going to want somebody who knows the ins and outs of Monterey, who speaks the language. I'm going to want someone who is incentivized by that commission, like any other customer, to be there and to be motivated to help your client, to have a relationship with the plant manager. Maybe they know the maquiladora operation. That is a huge benefit. Forcing some piece of paper to show a broker just to be in compliance doesn't help you when a claim happens. And so that was something that we did, and we developed those relationships. And if you're a buyer out there with a maquiladora and you have no idea who the actual agent on the ground is who's going to help you if you have a loss, who knows the ins and outs of the requirements within that jurisdiction, then that might be an opportunity to say, yeah, it's nice that Travelers just assigned somebody and they issued a policy on Mexico insurance paper, but I'd like a little bit more connection. This is a meaningful part of my business. A huge interruption to this maquiladora could cost me millions and millions of dollars, the same way that it could here at my main plant up in Wisconsin. So setting it up that way is important. So whatever you have to insure down there, locally admitted policies, local broker, I recommend developing a relationship and having them be present within that relationship instead of being just passive. Then those policies are going to be scheduled on what's called an international package policy. Base premium, 2,500 bucks. It goes up from there. That's going to be typically with the same carrier that's insuring your domestic property, your domestic GL, your domestic auto, normally like Travelers and CNA and Zurich. And these international packages do a couple things. They cover nice things like trip travel, kidnap and ransom. They're just a blanket policy that you would have for any client that sells foreign, even if they don't have foreign operations. When you have a maquiladora or when you have a local brick and mortar on the ground, you absolutely are going to have these. And then underneath that policy, you're going to schedule your property. You're going to schedule the property locally admitted policy, the local GL, the local auto policy, because then that policy serves in what we call difference of conditions, meaning your buyer, your CFO in Wisconsin, gets used to the breadth of coverage that we have, which is very broad here in the United States. The Mexico policy has got different conditions. So that difference in conditions component of an international package drops down and fills in gaps for what you would expect a US policy to cover. And it's going to broadly sit over the top like an umbrella of what you would cover on a locally admitted Mexico type insurance policy. From there, that international package and the underlying locally admitted policies are going to then be scheduled on your umbrella so that the liability goes up through whatever tower you're building. That's the traditional structure. If you're with a big publicly traded stock carrier, they're going to help you with this. The only thing I want to reiterate is having that local broker connection, not just be a name on a piece of paper. Don't forget that if a claim happens, you're going to be as responsible and you want assets on the ground. The last thing you have to think about with the maquiladora, and typically this is maybe one of the more hazardous parts of it, is the back and forth. So if you are making parts down there to take advantage of cheap labor, but they're not staying down there, and then you have to exfiltrate them or repatriate them back over, the cargo insurance is really important. Finding the right trucker, that might not be part and likely won't be part of your maquiladora. You're going to have to find a third-party trucking firm to deliver your assets back to wherever they need to go in the United States. Keep in mind that from the maquiladoras, a lot of them in Monterey, back over the border, that's some of the most dangerous crossings for hijacking. And when I say hijacking, I'm talking like pirate type stuff. I'm talking about people that know that electronics, in a truck that are coming over the border and transversing that, those are worth a lot of money. And this is not necessarily the safest area of roadway. So making sure that you check with your cargo policy, your motor truck cargo, can I defer that exposure to the trucking company? If I can, do I necessarily have it extending from domestic to international as I cross that border? And what do I need if I need to buy my own insurance? A lot of this comes back down to how the contract is structured and then building my insurance around it. Maquiladoras are incredibly common. They're incredible assets for a lot of the customers I work with, specifically in the manufacturing space, to keep their margins high or to make their parts competitive, especially on very transportable, meaning smaller and repeatable parts that can be manufactured with fairly unskilled labor. So getting this right is really important. Being able to talk the talk if you're sitting in a prospect meeting is really important because finding out if they have a Mexico operation is going to be really easy to see when you look at that website in the parking lot before you walk into that meeting. So it's not that complicated. The insurance marketplace has become more sophisticated in setting up very turnkey solutions that match the turnkey nature of a maquiladora. So make sure you're doing this right so you don't find yourself in a bad position or uncovered when it comes to claims.